So here we go, the stocks I'm buying, May 2025 edition. There is 13 stocks on this video today. The reason why there's so many is because we did have a stock market crash. These are the stocks I bought between the 1st of April to the 1st of May. And as you probably saw, we had the Liberation Day, and that Liberation Day caused a nearly 20% dip in the stock market. And when there's blood on the street, that is my favorite time to buy. So it was towards the earlier part of this time period when I was buying a lot of these stocks. And today I'm going to go through the stocks that I were buying, and there was 13 of them. There wasn't a stock that I sold during that time frame. Now, I've done this series on the YouTube channel for like 8 or 9 years now, so you guys can track along with the stocks I'm buying, the stocks I'm selling. Any moves that I make in my stock market portfolio are always on this video series, so it's probably why it's the most popular video that I do every month. And yeah, I just keep that transparency so you can see what's happening in my portfolio. And you can even go to previous videos that I've done, the monthly series, and you can see how those stock picks are going. And yeah, I'm not gonna lie, a lot of the stocks that I bought in this month have already bounced up quite a bit because I was buying during the fear, and we've kind of, the stock market's rallied up the last kind of couple of weeks. But I'll point those out to you. There's a couple that haven't done so well. I'll also point them out to you as well. But apart from that, hit the like button. If you're new around here, subscribe. Let's get started onto these 13 stocks. Now, as always, if you don't want to wait for the monthly series and you want to see what I'm buying and selling in real time, the place to be is on the Patreon. Links in the description. It's £6 a month, or if you sign up for the yearly amount, it's £60. And on there, I post what I'm buying and selling in real time on there. And I also post 2 exclusive videos a week on there. And you get a Discord with 500 members on to talk about stocks, including me. Actually, this week, I think there's been 4 exclusive videos on Patreon. And if I can get the other 2 done today, I think there's going to be 6 exclusive videos on Patreon this week, which is not too bad at all. So if you do want to support the channel, links in the description, guys. And if you do want to start investing, links in the description to a Trading 212 account. If you do join through that link, you'll get a free fractional share worth up to £100. Now, like I said, the reason why there's so many stocks on this list is because it was the Liberation Day, and when that did happen at the start of April, it did mean the stock market did hit a stock market crash. Well, it was nearly a stock market crash. I think it was something like 0.8% off being an official crash, but let's call it a crash. It was the first crash since we've had since 2022, so coming up to nearly 3 years. And yeah, when there's blood on the street, that's my favorite time to buy, and that's what I did. I have had a nice healthy cash pile for a while, and I started to deploy that into some of the stocks I was seeing as good opportunities, and these are 13 of them. It's a long video, guys, so strap yourself in. I'll try and remember to do the timestamps when it comes to editing. Number 1, Hims and Hers. So yeah, I did start buying some more Hims and Hers. The stock had just got absolutely insanely cheap at $27. I was like, okay, I was buying the most Hims and Hers that I have bought since 2022. That's how cheap I felt it was. And that took my average in from where it was around about $6 from all the shares I was getting in 2022 time. It did increase my average up to $9, which means I'm still a good chunk up on the position. But more importantly, all the shares that I was buying during this dip here, all the shares that I was actually buying, are now already up nearly 100% since that time frame. And yeah, already getting the rewards after the last month. So really happy I built into my largest position into the portfolio. As well as that, they just came out with amazing earnings. EPS was beat by 0.08. That's an absolute mega beat on 0.20 expected. Revenue growing at 110%. Subscribers up 38% year over year. And like I said, this was at a forward P of like 35 or something only a month ago. Yeah, it was a great opportunity. They are expanding into the telehealth services. They do offer these TAMs at the moment of SH, dermatology, mental health, weight loss, and there is some new coming soon categories. But the crazy thing is they're only just scratching the surface. There is millions of TAMs that are worth billions of dollars that they still have to go into. So this company is very exciting at the moment, but the thing is they're only getting started as well, which is a great thing. They also recently set out long-term guidance in 2030 of 6.5 billion in revenue and adjusted EBITDA of 1.3 billion. If you do look at the current market cap of Hims and Hers, which is kind of about 11.6 billion, that does not look too bad of a valuation if they are able to get there in the next 5 years. If you do put it to the same sort of multiple that a Netflix trades at or a Walgreens, that's somewhere between, I think, a 30 or 40 times multiple, which would mean that there is a 3x upside from here on Hims and Hers. If you do look at the numbers once again, there's a little bit of a breakdown here on the numbers, but some more important thing is they've got 90% recurring revenue because it is a membership program with these telehealth services, high gross margins, and as well as that, the profit margins are expanding rapidly on the business right now. You can see here as they have launched into their new categories, the growth every year that this company has grown at. Very good track record, great record of beating the market. And as you can see here, that is only forecast to continue with the revenue growth and profit growth. And as well as that, they do have an absolutely cracking balance sheet. Look at that, no debt on there. And they currently sit on 322 million. So if they can maybe start chucking some of that into a share buyback, that'd be absolutely amazing. And like I said, maybe now it's not the best valuation, 84 times earnings, but at the start of the month, you could have got this for half the value what it is right now, and that is what I was doing. So Hims and Hers is a stock that I have been buying. Mercado Libre is number 2. Mercado Libre is one of my favorite companies as well. So we just talked about Hims and Hers. That is my largest position. Mercado Libre, I think, is my 4th largest position in the stock market portfolio. And same again, at the start of this month, you were able to go pick Mercado Libre up around about 1,700, which is just absolutely nuts. Since then, the stock has rallied up 36%. So I'll just make you aware of that one. But yeah, the chance to go buy Mercado Libre on one of these dips that sometimes it does have, it's already had 2 this year where it just kind of drops out nowhere, like 10-20%. And in my opinion, if you can get Mercado Libre on those 10-20% drops, yeah, it's definitely worth considering it. And they recently reported earnings as well this week, which also meant the stock jumped 5%. The recent earnings, once again, absolutely fantastic. You can see here, EPS was an absolute monster of a beat here. And because, you know, sometimes you get the times where the Mercado Libre share price, drops 20%. And then the beating EPS so much, like so quickly you can go from picking this company up at 51 times forward earnings, which it is right now, which I'd say is maybe a little bit more on the expensive side. But very quickly, you know, a 20% drop, the EPS beats, you can pick this company up, and it was happening at the start of this month. You can pick this company up at like 32, 33 forward times earnings, which, yeah, that's incredible when you are able to do that. Obviously, most of you guys will be aware they are the Amazon of Latin America. So Amazon were a little bit slow to launch into Mercado Libre into Latin America, and Mercado Libre went, you know what, let's beat them there. Let's build up all these fulfillment centers, and as well as that, let's create and one reason why Amazon were quite slow to go into Latin America is because there wasn't a digital payment method really set up in Latin America at the time. So they went, okay, we're going to build the fulfillment networks before Amazon does, and then we're also going to build a payment network before Amazon does, and then we're going to take the market share off them. And as you can see here, they've really started to get the rewards. And as we see here, it's only just starting to enter the boom of e-commerce in Latin America. So the likes of Brazil, the e-commerce is one of the fastest growing e-commerce countries out there, as well as a ton of the other Latin American countries like Argentina, for example, as well. And it's probably about 10 years behind where like America is. So you think of how successful the e-commerce has been in the last 10 years in America. Well, imagine you get that opportunity right now to go do it in Latin America with Mercado Libre, and that's exactly what it is. If you look at the recent financials as well, you know, unique active buyers are growing rapidly. Obviously, a little bit of a drop down from Q4, but as we know, Q4 is the busiest time. If you do look at over the Q1 2024 period, it's actually speeding up to 25%, which is great. The fintech as well, look at the growth in the fintech, the monthly active users as well, still growing at 31% as well. And what they're also able to do is they're able to offer now credit as well to their users, which obviously previously before in Latin America, a lot of people didn't have access to this online spending, and now they're getting access to easy credit as well, which they should do really well from. And like I said, you know, right now it's 51 times earnings, but at the start of this month, you could have picked this up at like 33 forward times earnings, which is just, yeah, shouldn't be happening. So, and I'm sure as we look at Simple Wall Street, the revenue and profit growth, I would expect just to continue to expand going forward. That takes us on to number 3, which is SOFI. So SOFI, once again, this was another one that had a bit of a dramatic dip at the start of the month, entering the $9 range. We've not seen SOFI enter the $9 range since we were back in around about October 2024. So yeah, that was a time where I was like, okay, we're going to go buy some SOFI. Since then, once again, this is another stock that has rallied up by about 33%, so just bear that in mind. But you were able to go pick this one up at like 25 times earnings, which just shouldn't be happening. These guys recently reported earnings as well, and they were absolutely fantastic. A mega EPS beat by nearly double, revenue growing at 32% as well, and the hikes up the full year guide. So that's what we call a triple beat right there. Now, if you look at the timeline of SOFI, you can see here how much they are coming that one-stop shop for easy access to financial services. This is really popular for younger people that want easy access, all in one platform, the best services. And as these younger people that use this platform get a little bit older and use more of the services, SOFI is only going to be a bigger and bigger company. I think it has the potential to becoming the likes of a JP Morgan out there. And even if it comes the half the size of a JP Morgan, that would still be a major increase in the share price from where it is right now. But they are adding into more and more products. You can see here some of the products they do have with the likes of the banking, the credit card, the investing, and the loan side of the business. And because it's been so successful for the users, members are growing at 52% of a CAGR, and products as well are increasing at 54% as well. Now you can see they broke down how their net income is building up year after year, and their adjusted EBIT is scaling up as well, and also now posting net income as well. I don't think it'll be too long until we do see the likes of SOFI start entering the likes of the S&P 500. They are having a little bit of a drop in profitability this year. They are investing into the company, but they should get the rewards for that further down the line when they then start putting record amounts of profit in 2026. And when you start looking at 625 million of profit on a 14 billion market cap, it's not too bad at all. So I do like SOFI. Moving on to number 4, the King. I did add into the King at the start of the month. It's had a bit of a bounce, not a big bounce as some of the other stocks that I mentioned on the list earlier, but it has had a bit of a bounce since that time frame. So I am buying DraftKings because I believe it is going to be a major player. Well, it already is a major player, but a major player in a major growing TAM, which is the US online sports betting. The US online sports betting is growing around about 10.5% a year. And also iGaming, so that's like the casino games online as well, that's also growing at a big rate. And that's actually probably going to be even more bigger than the sports betting side of it as well. So in case you don't know, sports betting sounds crazy to us in the UK, but sports betting was not allowed in the US till only a couple of years ago. They did start allowing online sports betting in 2018, and since then there's been a surge of states to still, well, they have started to offer it, and there's still a good chunk of states, I think nearly half of the states, still to offer it as well going forward. So still major growth. And you can see here, New Jersey was one of the first states to allow online sports betting. You can see here that the growth has continued even after it came allowed to still grow at very impressive rates as well. And as well as that, because we are starting to see the adoption as well of these states happening quicker because people are now more aware of it, there's national advertising. A lot of these states, when they launch, they're actually having bigger revenue growth at the start, and also a bigger ramp up into the profitability as well. So now that DraftKings is getting more scaled up in some of these states, we are still seeing a surge of revenue, but we are now starting to see the surge up in profitability. And if we look at 2026 numbers, we are currently trading at 24 forward times earnings, which is very good for the numbers that DraftKings are currently doing. If you do look at their revenue growth CAGR, they expect to be at 14%. Now at 2026, they're expected to do 6.2 billion in revenue. Now, if you actually do look at where they are at right now, they're actually going to be there a year ahead of where their expectations was when they did their investor presentation day around about 2 years ago. So they're actually growing faster than what they thought they were going to do, and we can also see the profit scale that they're going to potentially achieve as well. Now, like I said, there's still plenty of these states to come online. So they do have 51% of the state's population in the US right now doing sports betting. So there's still another 50% to go. So there's a major area for them to expand. Now, the most exciting bit as well is the iGaming. So the iGaming is more profitable and also has more revenue. So right now, iGaming is only in 10% of the population of the US. But even though it's 10%, 1/5 of sports betting, it makes up half of the revenue of DraftKings. So the iGaming has still more growth to go than the sports betting, and it's more profitable and more revenue potential as well, which is probably the most exciting thing. So yeah, DraftKings is one of those that I look at, and even though the last earnings weren't the best, and I made a video on that, I'm in this for the next 5 years. And if I come back in 5 years and DraftKings still keep up their duopoly that they have with FanDuel, this company is going to be valued a lot more than where it is today. That leads me on to the next one, which is Google. Of course, I added a little bit of Google on this list. Google's actually not really done anything since I bought it, to be fair. It's about break even. But there's been a lot more fear out there with Google, and that's why. Probably starting with the one that came out last week, which is to talk about Apple. And Apple said that they are starting to see market share taken away from Google with some of their AI products. Now, I was laughing because I thought this is the same Apple that have not developed a decent product for like the last 7 years. The same Apple that do the hokey pokey about if they're going to be investing into AI or if they're not investing into AI. I was like, come on, give me a break. Let's put a bit of respect on Google's name. And I think that people think Google is just going to stand here without actually realizing what Google have going on. Google currently have Gemini. Now, in my opinion, Gemini is actually the best AI platform out there right now. So if they're able to implement this into Google Search and other products they currently do have, it's going to be not only, people talk about AI being a big headwind for Google. I think Google could have a big tailwind with this, because if they have the best AI product, that's only going to allow them to do even better going forward. And when I look at Google Gemini, in my opinion, it's the best AI product out there right now. And I think people are looking at it and thinking, looking at Google where they were a year ago, where they were a little bit behind the game. Right now, they're on top of the game, and I just don't agree with the fear that's around there with the whole AI situation with Google. The recent earnings as well suggest there's definitely no impact going on with Google, as revenue grew 12% year over year, and profit was growing even faster, which I don't think, oh, I do actually have it, yeah. Total operating income grew at 20%. Yeah, so the profit isn't only growing as much as the revenue, it's actually growing faster as well. And a good chunk of that as well is because of the Google Cloud, which is currently growing 28%, which is impressive. Now, the other wild card that you get with Google is Waymo. So a lot of people talk about self-driving, Tesla self-driving, and that's currently worth, billions. Well, not even factored into the price when you look at Google, because, when you look at Google right now, you're able to pick one of the best companies up at the world at 16 forward times earnings. If you to look at what the S&P is valued at, the S&P is valued at 26 times earnings. So the Google is massively discounted to even what the market is currently trading at, which is crazy, because when you look at Google, it's one of the best companies in the world. So Google should trade at more than what the market's trading at. So the valuation is just nuts. But as well as that, you're getting these free bets. So something like Waymo, for example, is actually out there doing driverless taxis. And look at the growth in California for this. And right now, it seems like to me that that's getting absolutely no valuation in the Google share price. If they were to split that off, how much that would be worth would be incredible for Google. So yeah, I am a big fan, because in my opinion, that is the best company in the world, and you're getting it at such a discount compared to the market right now. Moving on to one of the other best companies in the world, which is Amazon. I am buying Amazon, and in the last month as well, this one's had a bit of a bounce, but not an incredible bounce, but yeah, it's had a bit of bounce. I'm actually still adding into Amazon right now. And like I said, one of the best companies in the world. Amazon is taking over the world, isn't it? It's got one of the best delivery networks out there. Even in the UK, it's even better than Royal Mail right now. And how long's Royal Mail been around for? The last 450 years. And Amazon's been able to build up a better delivery network in the last 5 years than what Royal Mail had for the last 450 years. Yeah, when you have the ability to deliver parcels within 24 hours, yeah, that is some form of moat. And then not forgetting the other things like the Amazon Prime, the Amazon Video, Amazon Web Services that you're getting with this one as well. Yeah, major growth drivers for them. And that's why the last results were impressive. The market didn't love them. And I was reading them and I was like, yeah, I'm loving these. EPS with a mega beat. For so long, Amazon invested heavily into the business and it didn't really show the proper profitability, but we're kind of seeing that a little bit now. Revenue is still growing at 10% as well, as you can see here. Amazon Web Services, the most profitable part of the business, still growing at an impressive 19%. And because of all this, we're seeing the profit actually expand even faster than the revenue, a bit like what we're seeing with Google. If we look at Amazon and maybe the best way to value Amazon, which is price to operating cash flow, it's currently sitting at around about an 18. It's normally traded around about 26, and the least it's ever been, the minimum it's ever been is 16. So you're still getting it pretty low to the lowest it's ever been for a long time. So yeah, I like Amazon on this dip here. Next one, Adobe, another stock that's kind of being affected by the whole AI talk, but in my opinion, AI could actually be a big tailwind for it. It has had a bit of a rally up since I did buy it by about 10%, but if it was to have a bit of a dip back down into these sort of levels, I would not mind buying Adobe. I use Adobe. It is a fantastic platform. I cannot see myself moving away from it. I've got all my files, all my templates set up on it, so it's definitely a sticky platform. And if Adobe was to ever increase the prices by a couple of pounds every month, you know what, I'd probably sit there and go, well, I'm going to pay it because I can't be bothered to switch. So there's definitely some stickiness there. And as well as that, they still have some of the best products out there with Adobe Photoshop, as you can see here, getting the Editor's Choice Award in PC Magazine as well. Now, a lot of it talk about Adobe is that they're going to get disrupted by AI, but I don't agree with that. People say that that's it, Adobe, it's game over, but hold on. You think Adobe's going to sit there? Adobe that has how much in profitability every year? They're going to be there developing one of the best AI products out there. And if they're able to create one of the best AI image products out there, they will do very well. And in my opinion, that's down to the Adobe Firefly. Are they able to do that? We will see. But I would not be backing against Adobe with the rich history they have and the amount of profit they're able to throw into it. And as well as that, look at the, with the profit they're able to generate, look at that, 25 billion stock repurchase program. To put it into context, Adobe's 123 billion stock, that is incredible as well. With the 10% drop that it was on, it did mean that, right now on a 4P, it's around about 18 or 16 on 2026 numbers. That meant it did drop down to 16 times earnings on 2025 numbers and 14 on 2026 numbers, which was just way too low for me. And I thought, 14 times forward earnings on 2026 numbers, 25 billion share buyback. Yeah, I like this for one of the best software companies in the world. Next one, Nphase Energy. So this one is actually probably down slightly since I did start buying a little bit of Nphase Energy. Although, yes, this week it actually had a pretty good rally. The reason why is because some of the new products, the market liked some of the new products that it brought out, which is the new European balcony solar system that they introduced, and also the ability to put some of their new products on some of the older products when previously you weren't able to do it. So the market really liked that. Overall though, I'm looking at this long term, come back to me in 5 years, solar energy, is it going to be bigger than where it is right now? 100%. It's going to grow massive, especially when you look at some of the demands that we're seeing with AI at the moment. It's going to be a major growth driver in the next few years. As well as that, when I look at oil prices, oil prices are at a complete low. When oil prices do start going up, we will see Adobe really benefit from that. And also interest rates will start coming down as well, and that will make it a lot cheaper to get the Nphase systems. So those are two major tailwinds that are still going to come for it. So yeah, I think you come back in 5 years and Nphase will do very well from here. The latest earnings were okay. There was a bit of a miss on the EPS, a slight revenue miss, nothing too major, still growing at 35%. The only thing that I didn't like in the latest earnings is that the impacts from the tariff situation was a lot more than what I expected it to be. That's the only negative that I did have on the stock. But even so, the growth should still be okay during this time frame, and they still throw good amounts of profit off, to be fair, to say that it's like at the bottom of the cycle. And 20 times 25 numbers, 16 times 2026 numbers, I think it's worth it. And like I said, I come back in 5 years when interest rates are lower and oil's gone back up. I think solar will be very much popular again, like it was back in 2022. Moving on to the next stock, which is AMD. I think you knew this was going to be on this list, and for the first time ever, I think I've got to say, I've been buying this stock, and the stock is actually up from when I've been buying this stock, which is good to see. And it's about time. Even though it's up a bit, I feel like the stock will be even more higher than this in the next 5 years. The latest earnings were fantastic. If you look here, EPS was a mega beat, revenue at 36% growth, which means that we've seen, I think, AMD go from 16% revenue growth to 20% revenue growth to 28% revenue growth, and now we're up 36%. So the revenues, the growth is accelerating now on AMD, which is great, and a great guide as well going forward. What we're seeing as well is the data center, which is now the biggest part of the business, growing at 57% year over year, and also the most profitable part of the business as well, is really scaling up at the moment. And why is that? Because they fell behind Nvidia. The last couple of years, Nvidia have done really well. They've taken a lot of the AI boom, but at AMD, they're kind of getting the game together now. Some of the new products are doing really well. What we have coming up in the next couple of months is we're going to have the MI350 coming up as well, which is to compete with the likes of the Nvidia's Blackwell lineup, and that should hopefully do really well for them, and that should also then put them onto the next surge of profit and revenue growth. And right now, 17 times 2026 numbers, and you look at the growth they're supposed to do, look at the ramp up in the profitability. Yeah, I think AMD is definitely an interesting one for sure. Moving on to the next stock, which we have Block. So Block is actually down slightly since I have bought it from the start of the month. I did start thinking that Block was starting to get to a little bit low valuation, 11 times forward earnings, but I'm not going to lie, this is probably the one buy on this list that I actually regret buying at the moment, because they did come out with earnings, and I did think the earnings were pretty poor. You can see here there's a big chunk or miss on the EPS, a bit of a miss on the revenue, down negative 3.2%. Looking at the earnings, the reason why is because cash app growth slowed down. Why did I think that happened? I think a lot of it is to do with Venmo. I think they lost a lot of market share to Venmo. So we'll see if they're able to catch up with them and get these financials in a better place. I don't think it's terrible though, because like I said, when you do look at the forward P, it's still relatively cheap, but certainly, sometimes, I go on this, especially like today, the amount of stocks that I've kind of shown you guys and like, hey, look, the stock's up since I bought it and I look an absolute genius. There's a little bit of proof here that, sometimes you don't get them all right, and sometimes that I'm not just making it up for you guys, because as you can see, well, obviously the guys on the page can vouch that I've been buying these stocks when I have been buying them, but sometimes they don't, a spanner can be thrown in the works, and certainly that's the case with Block. I think if I knew that they were about to post these financials that they did post, I probably wouldn't have bought it. That one's a little bit of a regret from buying this one actually in the last month, and I'll actually probably not buy it at the moment until I see some of those financials improve actually. So moving on to the next one, a little bit more of a positive one there. New holdings, this one is up 21% in the last month since I did start buying this one as well. Bit like a Mercado Libre, the only difference is they're not actually an e-commerce company, they don't sell the products, they're just a bit like the Mercado Pago platform. They're in the fintech space, and like we said, fintech major boom at the moment in Latin America. The reason why is because e-commerce is booming at 14% growth, and people need access to these cards to buy things online. And then as well as that, for the first time, it's a lot easier access to a lot of credit, which is the likes of New Holdings are offering. Because of that, the financials are being very good. Revenue growing at 24%. If you actually look at an FX neutral basis, it's even higher than that at the moment. Profit is scaling up very nicely on these platforms, as you can see here, the revenue growth and the profit growth as well. Pretty decent balance sheet as well. If the balance sheet does load for us, let's have a look here. Yep, look at that, 27% debt to equity, which is obviously really good. And by the way, if you do want to sign up for Simple Wall Street that I use in these videos, I've got a link in the description, guys. You join through that link in the description, you'll get a 14-day free trial. And then at the end of the 14-day free trial, they'll actually give you a discount code for 30% off for the full year. And I think they're great platforms. That's why I use them in the videos all the time. So if they keep doing that, and the stock is currently at 24 forward times earnings, I think that's pretty good value there. Moving on to the next stock. So another company that's a bit like DraftKings in this kind of big boom of this US online sports betting space is gambling.com. So another stock that's had a pretty good rally since I did buy it, but I still think this is quite cheap. And as I was putting this video together, I was actually thinking, you know what, tomorrow I could be quite tempted to maybe add into the position here, because it's still relatively cheap for how good these numbers have actually been for the stock. So first thing to say is this is different from DraftKings. It is not a gambling company. It does not offer any gambling services. What they do is they are basically like the booking.com or the nerd wallet of this space, where they are able to see people that want to do online sports betting. They're looking for bets, and what they're able to do is say, hey, go to this platform like DraftKings or FanDuel. If you go do that bet over there, this is the odds that they're offering. And as well as that, if you sign up, you get this certain boost on your account, like you bet £10 and you get £30 free bets. So it's a bit of a recruitment platform for some of these companies in this sort of space. And you can see it that they are in the kind of more mature markets, which is the global online gambling, which is still growing at a 12% CAGR. And they're also in the US online gambling space as well, which is still growing at 28% as well. So that has major growth going forward. Realistically, it's not even that bad of a value, 12 times forward earnings. And if we were to have a look at the numbers that they have been doing recently, the profit has been scaling up very nicely, and the growth has been very good as well. And they also have a very good balance sheet here. They sit around about 18% debt to equity. So with that, they can do things like the share buybacks, and they do like an acquisition every so often to go buy out a competitor. So a big fan of that one. And that takes me on to the last stock on the list, which is Shopify. So Shopify has had a pretty decent bounce at the moment, although recently had a bit of a pullback. It seemed like the market didn't like their earnings, and I was thinking, I don't know, I really like these earnings. It's still growing at 26% year over year growth as well. And if we look at Shopify at the moment, they've really focused on the side of the profitability now, because they're growing fast and the profitability is ramping up as well. And I can only see Shopify being used more and more going forward, with obviously if you want easy access to the online space to be an e-commerce company, best platform to be using, but now because of all the other services they offer, like the access to easy credit or loans for your businesses and the payment options that they offer as well, if you're basically going forward as an e-commerce company, you're probably going to go to Shopify going forward, and there's still plenty of growth for them internationally as well, and other drivers that they can still do as these platforms do come onto their website. I'm sure there's more services still add in, so we're a big fan of that one. So yeah, that's the video for today, guys. Hope you enjoyed it. Those are the 13 stocks. Apologies if it was a little bit quicker than normal, but obviously I had to spend only 3 or 4 minutes on every stock, because if I was to spend my normal like 10 minutes on every stock, we'd be over an hour and a half, and none of you guys want to listen to me for an hour and a half. You've got better things to do on your weekend. So hope you enjoyed it. If there's any certain stocks that you'd like a longer video on, just let me know in the comment section, and if there's enough demand for them, I will cover them. Apart from that, have a great rest of the weekend, great rest of your Sunday. I'll try remember to do the timestamps. This is a note to Jacob as you go back through the editing. Remember to do the timestamps. Apart from that, guys, thank you so much. See you in a bit.